Hey everybody, Brian here. Today is Tuesday. It's the 24th of September, and we saw the market pull back another 40 cents here, about a quarter of 1 percentage point. The S&P 500, as you can see, is below that declining 5-day moving average, and we had today's high just about in this prior little area of support. I was thinking that I wouldn't be surprised to see it rally up to the 5-day moving average, but we did sell off here at the end of the day, and we can see that as soon as we broke that volume-weighted average price at the end of the day, the buyers pretty much gave up and went home for the day. So we have right now the 2-day volume weighted average price we just broke below. We're below the 3, the 4, and also below the 5-day volume weighted average price. So this market's still in pullback mode. That's not a surprise. We spoke about this, and it continues to be looking like it's going to be in pullback mode for a little bit here. From the recent low in August to the recent high, that is, we've seen 38.2% hold up right now at this 169.5, and it's interesting that the volume weighted average price since this low right over here, you can see, comes in right at a 50% retracement at about 168.30, and then of course we have the 50-day moving average right down here at about 168.10 or so. So it seems as though a little bit further pullback down towards the 168 level wouldn't come as a surprise at all. And in fact, if you take the measured move, which would say point A right here to point B would be equal to, this is point B, this is point C right here, it would be equal to point C to point D. So we take the height of this pattern, which is 173.5, down to 169.5, so that's 4 points, and we would subtract it from this point right here, which is about 170.5. That would actually give us a price objective 4 points lower of 167.5. So 166.5 rather. So we just still be on the alert that we should be defensive here. The number of decliners did advancers did exceed decliners today, 1,630 to 1,360. The Nasdaq was flat, and it's really, it continues to hold up obviously a lot better than the S&P 500. 78.50 is an important level of support here. If we break below that, then I think we're going to have this trend line, which arguably has already given way, but that would create the lower high here at 78.50, breaking below and holding below for a half hour or so. That I think we would want to look at some of these retracement levels in here and think at least down to the $77.80 level would be reasonable, and we've seen some consolidation in that area already. So I think that that's a reasonable level that this market could come down to, about $77.80. Is again what looks reasonable here. But if we get back above 79.50, then it's still the market. The primary trend is higher. The biggest concern, I suppose, is the financials, which have declined now close to 2/3 or 61.8% of that similar move from the August lows to the highs this month. And you can see on the daily time frame that again it's kind of choppy in here, this action, and we're below the 10, 20, and right at 10 and 50. We're right on the 20-day moving average. It's really just kind of a choppy mess in the financials. But near term, we have a declining 5-day moving average with lower highs and lower lows. So I certainly wouldn't be buying into this. I think that a little further pullback is definitely in order, and I wouldn't be surprised to see that 1990 two-thirds retracement level hit. The Russell 2000 was up 7 pennies today, and this market still clearly in an uptrend, higher highs and higher lows. Whether you want to draw that trend line off of these lows or this low right here is really irrelevant. But what's most important is the lows for this week at about 105.70. If we break below that level and hold below it for more than about 30 minutes, then I think we're going to see the likelihood of probably a retracement down to at least 38.2% or about 104, the high 104s, so down to there. And the semiconductors actually were up 25 cents today. So the semiconductors, which have been the leader of the Nasdaq and financials been the leader of the S&P, is why we're getting those different moves in the larger indexes, because they're key components. But the semiconductors, this group is holding up. 40 is clearly, I'd say 39.90 is clearly a key level of support. We saw that this trend line was broken Trend line breaks don't mean that the market will reverse. It means the rate of ascent has slowed. What would turn this market lower in the intermediate term is to get below and hold below 39.90 in the intermediate term. You know, if maybe it did something like this and then break down, create a lower high near that level, and then continue down towards 39 and change. So overall, you know, we've got very mixed messages. That's not unusual, and as is always the case, what's more important than these indexes is the individual stock that you're trading. Take the the cues from the stocks that you're trading. Apple, again, still is kind of messed up here. I think it's very encouraging that it's holding above this prior area. So I think 485 is probably going to end up being some support in that area, and we just still need a little bit more time for this stock to neutralize before it really, I think, sets us up with a low risk trade opportunities.